I come from a credit background, and the first thing I try to do is value Bitcoin using open market interest instruments that people can't argue with because it's set by the market. The value is over 250,000 US per Bitcoin based on that methodology. And I have a target in this binary outcome of over 2 million US dollars per Bitcoin, which assumes that 5% of all of global financial assets get moved into Bitcoin. Bitcoin is cheap on a probability adjusted basis. I'm comfortable owning Bitcoin at 30,000 bucks. Bitcoin's the only digital asset that protects me against the fiat Ponzi.
In the world of Bitcoin, crypto, and investing, Greg Foss applies his expertise in valuing Bitcoin's upcoming price shift in the last part of 2023. As someone who appreciates the mathematics behind credit markets, Foss calculates the value of Bitcoin relative to other financial instruments, aiming to determine whether Bitcoin is overvalued or undervalued. Utilizing a valuation methodology based on credit default swap spreads, Foss arrives at a current value of over $250,000 per Bitcoin. However, he emphasizes that this value is dynamic, as market spreads continue to fluctuate and Bitcoin's price rises. Foss says he envisions a binary outcome for Bitcoin's future, where it reaches a target of $2 million per Bitcoin, and when we can expect this climb in price. When applying probability-adjusted analysis, Foss concludes that Bitcoin is cheap at its current trading price of $30,000. But he maintains that even at a higher price of $100,000, Bitcoin remains an extremely attractive investment in the coming months, due to its potential as a hedge against fiat debasement and the Bitcoin halving that's right around the corner. Let's get right into the latest interview with Greg Foss, as he discusses the future of Bitcoin, investing, and the dynamic world of crypto in the last part of the year. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
I come from a credit background, and the first thing I try to do is value Bitcoin using open market interest instruments that people can't argue with because it's set by the market, okay? I'm not making the market on credit default swaps of sovereign nations. That's set by an efficient market of participants who are determining what the likelihood of default is of sovereign debt, and it changes on a daily basis, and it's reflected in what's called a CDS spread, or a credit default swap spread, on that particular borrower. And I spent my life in credit. I think credit is a very smart market, generally dominated by people who like mathematics and who have mathematical models. So the first thing I do is I calculate a value of Bitcoin relative to other instruments in the world, and I determine whether Bitcoin is rich or cheap on a value basis. And I mentioned my CDS methodology, and Swan Bitcoin has a guy by the name of Alpha Zeta, that's his Twitter handle. Alpha Zeta produced this thing called the NakamotoPortfolio.com. It's a brilliant open source software portfolio that one of the tools in there calculates the value of Bitcoin using the Foss model of CDS spreads. I ran it this weekend, and using open market rates together with a couple of adjustments that I use, because they're personal adjustments, I get a value of Bitcoin today. A value, not a target. I need to say this. It's a value that can change because the open market spreads change. The value is over 250,000 US per Bitcoin based on that methodology. So that's the value. Now you ask me for a target. Well, don't forget that value changes as the probability of default of sovereign debt changes, because I view Bitcoin as being the anti-fiat. But let's go back to a simpler target price methodology. The total addressable market of financial assets in the world, we already mentioned, was 900 trillion US. So I have a valuation methodology that says it's worth over 250,000, but that's a dynamic measurement. And I have a target in this binary outcome of over 2 million US dollars per Bitcoin, which assumes that 5% of all of global financial assets get moved into Bitcoin. Everything else being equal, that's 45 trillion, or otherwise about twice the size of the US GDP. Point is, you have this target. To make the math easy, let's make it a $2 million price target. And it's in today's dollars. I need to be very clear about that. That's 2 million US per Bitcoin in today's dollars. So we're not talking about appreciation or due to a deflating or debasing US dollar. So you got your 2 million, and the other side of the equation is a 0, okay? And let's put a probability that that happens, and we'll play a game. I'm not 100% certain it gets there, but But if I was 50% certain it gets to my price target and 50% certain it goes to a 0, which is also not really an outcome, but we'll still use it in our probability analysis. 50%, when you calculate an expected value, 50% times your value of 2 million equals 1 million, plus 50% times 0 is 0. You add the two together, you get an expected value. That's what expected value analysis is, meaning if Bitcoin is trading at under 1 million US dollar per Bitcoin, based on this binary distribution with a 50-50 outcome, you're supposed to buy it and buy more if the price is under a million. But here's where the math gets interesting. What if you turn it on its ear and say, okay, what is the probability the market is giving me that my price of 2 million is right? And it's trading at 30,000 US. Make the math easy, 30,000. What's 30,000 divided by 2 million? It's 1.5%. It's another way of saying the market is only giving me a 1.5% chance I'm right, and it's telling me there's a 98.5% chance I'm wrong, right? You get that? You add the two together, there's your 30,000 current trading price in today's dollars. I'm not 100% certain Bitcoin hits my price target, but I'm way more confident than 1.5%. And therefore, I'm comfortable owning Bitcoin at 30,000 bucks. And here's where things get fun. Even at 100,000 bucks, it's stupid cheap, people. There's no question in my mind that it is the best horse in the race. But I believe that every portfolio in the world needs an allocation to Bitcoin because of the certainty of fiat debasement. Why Bitcoin and not this other thing? The simple answer is, first of all, Bitcoin has first mover advantage. Secondly, and most importantly, it is the most secure digital asset defended by the strongest computer network in the world and defined by its 21 million supply of Bitcoin. Bitcoin's the only digital asset that protects me against the fiat Ponzi.
In defending his choice of Bitcoin over other cryptocurrencies, Foss highlights Bitcoin's first mover advantage and its robust security ensured by the strongest computer network globally. He emphasizes the significance of Bitcoin's fixed supply of 21 million coins, which adds to its scarcity and strengthens its value proposition. In contrast, Foss dismisses other cryptocurrencies with smaller supplies, stating that the security of the network is essential for any digital asset to maintain its value and credibility. Bitcoin's status as the most secure digital asset makes it the best choice to protect against the potential devaluation of fiat currencies. Foss's analysis encourages investors to consider adding Bitcoin to their portfolios, seeing it as a hedge against fiat inflation and an essential component in a well-diversified investment strategy. By leveraging his credit background and mathematical models, Foss presents a compelling case for Bitcoin's investment potential and the importance of evaluating cryptocurrencies based on their intrinsic value and security features. What do you think about the latest interview with Greg Foss? And what are your thoughts on his insights regarding Bitcoin, investing, and the crypto market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.